Chairman Powell throw me a lifeline. I yield back.
Thanks, Senator. Senator Smith of Minnesota is recognized.
Thank you, Chair Brown and Ranking Member Toomey, and welcome to the committee again. Chair Powell, it was, as always, was good to talk with you yesterday, and I want to just say, Mr. Chair, that I think that together, Chair Powell and Lael Brainerd would make a great team at the Fed, and I think you're a strong combination. So, Mr. Chair Powell, I'd like to ask you about where we are with employment and how this relates to the decisions that the Fed is making. Last week, the Bureau of Labor Statistics released job numbers from December, as you know well, and thanks to the American Rescue Plan, and I would also say the hard work and grit and innovation of Americans, the unemployment rate has dropped to just 3.9%, which is really a remarkable and historic recovery from the beginning of the pandemic. I'd note that in my home state of Minnesota in November, the unemployment rate was even lower. This is really an incredible accomplishment. And you and I have discussed this before, how it is useful to unbundle, though, these aggregate numbers so that we understand a little bit more about what's happening. We understand that it's a more complicated story. For example, amongst black workers, the unemployment rate remains stubbornly high at 7.1%, more than twice what it is for white workers. So, Chair Powell, could you tell us, how should the Fed consider factors like this as you evaluate economic strength and whether the economy has reached full employment? The factors, what I'm referring to is unbundling these aggregate numbers so we understand more deeply what impact where we are with the different sectors of our economy.
Sure. So we do look at a wide range of indicators to determine whether labor market conditions broadly are consistent with maximum employment. It's not a single number like inflation can be. And you mentioned a couple of them. So what we saw at the end of the last very long expansion was that unemployment rates and the gap between white unemployment rates and other unemployment rates were at all-time lows. And this was a very desirable feature and really a feature of having a tight labor market. So that's something that's a little bit of something that tells us whether the labor market is tight. We're not targeting a particular number there, but we're using it to inform our thinking. You mentioned African-American unemployment, which is at 7.1. It dropped by 2.9% this year. That's the same decline as for white workers. The other thing I'll say is that there was an increase in December of 5 or 6 tenths among black unemployment. It's a much smaller sample size, and it's pretty volatile, so we would tend to look for a couple of months. It can bounce around more than the overall aggregate. Another key aspect of maximum employment, though, is participation. So we also want to think that participation is at its structural high level, and there isn't a lot of slack in that pocket. And that's been, we saw that at the end of the last cycle. We saw participation holding up in the face of demographic decline. And so that's another thing that we look at carefully.
Yep. Thank you. I agree with that. And I think that we are in Minnesota, as we are all over the country, experiencing a shortage of workers. And I'm glad to see that what we are seeing, in fact, is wages increasing, especially for people who are in lower wage jobs. And that for the first time in a long time, workers, I think, have increased bargaining power, which is a benefit to them. So these are complicated issues. I think it's important that we kind of look beneath some of these aggregate numbers. But I want to touch on another issue before I wrap up here. You and I have talked about my grandmother, Avis Mason, who was born in 1898 and who became the president of a small community bank in Etna Green, Indiana. Her father, who started the bank, was blessed with 3 daughters, which is how she became president. Like so many banks around the country and over the years, her bank was ultimately sold to a larger bank and became part of the story of increased consolidation in the financial sector. And this pattern has repeated itself for decades in Minnesota and all across the country. Over the last 30 years, the number of banks in this country has been more than cut in half. And we've seen, I think, the harm that industry consolidation can do broadly, especially in small towns and rural places. I note the comments and the questions of my colleague, Senator Rounds, with whom I've done a lot of work on issues of concentration in agriculture. So, Chair Powell, one of the important duties of the Fed is to review bank mergers. Can you tell us how you think about bank mergers today, and what do you see as the impacts of consolidation on concentration and access to financial services, especially in underserved areas?
So we operate under a statute which requires us to consider a number of factors. And those include competition and future prospects, financial and managerial resources, convenience and needs of the communities to be served, CRA performance, BSA AML compliance, and financial stability. So all of those things go into and there's a rich lore of how we apply those things, and generally banks that are applying for permission to do mergers understand that body of work. More broadly, though, as we've discussed, if you could look back at the United States banking industry, for 30 years and more, almost 40 years, you've seen a very steady decline in the number of banks. So one of the things that's driving that is just the loss of rural population. And I've seen many in my earlier years at the Fed, many cases in which you'd have a county that had lost half of its population over the last 50 years. It's very typical of rural America. And there was only one bank left, and it wanted to merge with another bank in a nearby state. So anyway, it's a trend that's happening because of demographic changes. Also, fixed costs are going up. Regulatory costs are going up, and that's a fixed cost. The need to invest in technology to serve your customers is really a fixed cost now, and that requires a bigger bank. So community banks are part of the fabric of America, and we don't want anything we do to sort of exacerbate the problem of community banks going out of business. But there are strong secular forces that are driving this consolidation apart from, regulation, although that can be part of it.
Thank you. I believe I'm out of town. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Kramer from North